Dr. Charles, maybe you have a lamp nearby that you
Yeah,
can.
that's all I can give. I'm in the hotel room, and the lighting is not. Yeah, but I cannot put more up. Let me just see if I can move my laptop.
Much better. Thank you.
Okay.
Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is Tuesday, February 20th, 10:30 UAE time, and we have Brent crude oil trading in Asia this morning at $83.56, essentially unchanged in early trade. Yesterday was pretty flat with the US markets closed on a public holiday there, so trading volumes were quite thin. We would expect that to pick up today as Western markets get their week started. Let's kick off this morning with one of our favorite podcast commentators, Mike McGlone, senior macro strategist at Bloomberg Intelligence. Enjoyed his long weekend. Now he's back to work. Got to earn a crust, Mike, although it's still late there and it's still your long weekend, I suppose. But we do appreciate you joining us. Mike, your thoughts of where this market's going. It does seem we're up 10% thus far this year, supported by a few things, but geopolitics seems to be the wind in the sails, that incremental rise. Your thoughts on destination of travel?
Yes, Sean, I appreciate being on. And I think you nailed it exactly why crude oil is higher. You look at its brethren, natural gas, certainly U.S. natural gas, it's the lowest price is 1990. You look at the industrial metals, they're lower. Grains, they're lower. And so crude oil to me has a geopolitical premium. I view it as around $20. I think it's the upper end of the range. Brent around 85, WTI around 80, so right near the upper end of the range. Now, last year I thought that was a little bit early. It popped up to 95, that was the high, and then it trickled down to 70 by the end of the year. I think that's the risk. It's a big difference from last year's. Look at all the other commodities are heading lower. You look at the U.S. stock market. It is last year, this time was about a 20% discount. Now it's the highest ever. And we all see the latest data, our classic what you'd expect supply and demand elasticity from the big spike in prices up to the peak in 2022 in the back of Russia's invasion of Ukraine. So the cycle for commodities is all bad. They're on the downside of the high price cure. We haven't even started interest rate cuts. Typically takes a couple of years of cuts and a decent lag, except in one key country, China. And crude oil is the laggard on that way down in commodities. The key question is, can it sustain these levels? And I look at every day that's at these levels, it just brings in more supply from the non-OPEC sources, most notably US and Canada. It's squashing that demand. The demand is not really there. And to me, it's just a matter of time we flip the switch and it catches up and drops to $50 a barrel.
Lori Hatayan, MENA Director, Natural Resource Governance Institute. Lori sitting in Belgium, but nonetheless a strong watcher of all things Middle East and Middle East energy flows. Where are we going with this geopolitical narrative in the region, Lori? We have a ship, another one attacked in the Red Sea, actually abandoned by the crew. Reports are that ship may even sink. A cargo ship, not an oil or liquids boat, but nonetheless a badly damaged one. We had some missiles into your home country, Lebanon, seemed deeper into the country, into as far north as Saida. Where are we going with this major crisis in the Middle East?
All these incidents are very sad, but that this is becoming very absurd, I guess. So, and especially for those parties who are saying that they have opened all these fronts to support Gaza, because at the end of the day, this is not supporting Gaza. The situation is worse, getting worse and worse in Gaza. And now we are at the stage where everyone is worried about what will happen to the people in Gaza, because it seems that Israel has still decided, not changed its mind, that it is going to continue with its, if you want, final phase of the attacks, which is like going into Rafah, etc. So neither the Lebanese support front that was announced on the 8th October is helping. On the contrary, it is really becoming bad for the country. As you said, now the attacks are going deeper into Lebanon and away from the southern borders where it started, and with casualties to the Hezbollah military apparatus. So targeted attacks on their military apparatus. So that is painful, and nothing is changing on the Palestinian side. Same with the Houthis. After they were recognized again or removed from the terrorist list, they are back to being on the terrorist list. They are losing whatever they had built during these peace moments, and then nothing is helping. About like there are casualties in the Yemeni front. Same that could be said on the Iraqi front. So I think we are at the point where the support allies, or the support axis, the situation is becoming very absurd and dangerous to them, and nothing is changing. So how is this? When is this going to end? It's like it's really, we don't know. Because still this is in the hands of the Israelis, and unfortunately till now we don't see that the Israelis are being affected by this much, to the point of stopping the war. And
are we still in the zone of potential risk for this to conflagrate? We have these individual fires, and of course the major one in Gaza, which is a raging tornado onto the Palestinians there. But is there still a risk that they can join up and this becomes a much bigger threat to regional energy supply and that whole macro picture? Or is that off the table? If it was going to happen, it would have happened by now.
I do believe that it would have happened long before, so I don't think that's going to happen. Unfortunately, it's like these, again, all the victims are like the Lebanese, the Houthis, etc. We saw one incident, definitely not to be disregarded. We saw this attack on the Iranian infrastructure, which Iranians downplayed, kind of saying that it is not by Israeli, but they think that there are other factions. Even that statement is a statement of de-escalation, saying that we don't want that ultimate war, either Iran being attacked by the Americans, or even like escalating the tone vis-a-vis the Israelis. More than that, the Iranians cannot afford to have like this war affecting their economy and whatever they have done. They are ready to sacrifice the Lebanese, the Houthis, the Iraqis, because these proxies were made for that, to sacrifice in the name of the bigger cause. So as long as the Israelis are not directly attacking the Iranians, as long as the Americans are playing the game and not attacking the Iranians, even though everyone is saying that the fingers of the Iranians are everywhere, but no one is attacking any critical strategic asset in Iran, that means that this one needs to be contained.
And I suppose we're seeing
this is becoming very absurd in the region.
We're seeing that in the incremental oil price rise, but not necessarily stratospheric. The markets don't believe there's a threat to supply. Dr. Charles El-Inass, CEO, Cyprus Natural Hydrocarbons Company and Senior Fellow at the Global Energy Center Atlantic Council. Dr. Charles, we're seeing, the outlook for a big deal announced recent days in the gas opportunity in Egypt, offshore there. ADNOC and BP announcing a big project. Where is the East Med development? I mean, obviously the conflict in the region, but nonetheless, big gas opportunities at a time when the gas price, as Mike mentioned, is at near a 30-year low in the US?
Well, I mean, for a start, the crisis in the Middle East is having a small effect, only a small effect on the gas situation in the East Med. The majors are a little bit more careful about the investments they make. Having said that, only yesterday, Chevron announced a huge investment in Israel to expand production from Tamar, simply because Egypt is in the doldrums. It has great problems with gas. Gas production is going down continuously. The new discoveries may help them, but they're not there yet. Gas demand in Egypt is going up. And despite the fact that global gas prices are going down in Europe as well as everywhere else, gas prices in Egypt paid to the oil companies are fixed. The Egyptian market is acting independently from global markets. So the Egypt is trying its best to find more gas. There have been a few gas discoveries recently, small ones, and I guess these will be developed. But it has also opened up opportunities for Cyprus now to export the gas to Egypt. The Aphrodite gas field, Chevron is expected to come back with a revised plan by April, and I'm expecting that will get a go-ahead. Eni in Cyprus announced more gas discovery in Block 6, and within a month or two, it is expected to put forward a plan to develop that gas and send it to Egypt. So gas in the East Med, especially around Egypt, is still the center of attention. There is a huge opportunity there, and that's why ADNOC has gone in. That's why the majors are persevering and continuing with their efforts in Egypt. This week, Egypt has its annual conference, the Egypt's 2024, and I'm sure we'll hear a lot more developments in the gas sector to shore up Egypt, because it has a great problem. Great problem is that
Did we lose Charles? I think we did. Mike, I wanted to come to you on that and just pick up on the sort of the piece of supply and, what is, the sober enough climb in oil prices, but nonetheless inflated by the geopolitical risk, but also the non-OPEC supply. Dr. Charles mentioned Chevron's appetite there in the East Med, but Chevron also has a big appetite in the Permian Basin, and where U.S. supply may go. Wall Street seems to be back, wants to throw a lot of money at hydrocarbons, all these huge mergers and acquisitions we saw last year. Where do you think U.S. oil and gas production goes as we move forward this year?
There's one primary force to shut off U.S. supply and Canadian supply, Sean, and that's lower prices. We're still in the phase where prices right now around $80 in WTI are well above the cost of production, closer to 50 break-even cost, and there's no reason to shut it down. And the key thing that really struck me 2 years ago when people said, "Oh, shale's going to die," I've heard that for 15, well, at least 10 years. Is look at that upward trajectory in supply versus demand in North America. It's been in place for 20 years, and there's only one force that's really shut it off since the last 5 years or so, is that's when prices drop. So OPEC's in a bit of a pickle at the moment. The best way to really shut off that supply is to drop prices, to throw on supply, their supply, OPEC supply, and drop prices to below 40. That'll shut off shale. That's what it's going to take.
But we did see shale come to a kind of a natural wind down, or at least it sort of stopped going up in the mid sort of late teens, 5-8 years ago. Wall Street gave up on funding further exploits in the Permian and elsewhere. Is that appetite back? I mean, Bloomberg's reporting that it looks like it is.
It's one of those things in commodities. I enjoy hearing it, Sean. I think that happened after prices collapsed from 100 down to about 40. It's almost 40, 2015 and 16. It takes a year or an effect, and here we are. We're still on the wrong side of that cycle. So don't underestimate. It's not just U.S. shale supply and demand. U.S. diesel is it the same? Diesel demand is the same as 2015. It's declined it's well below the peak. Unleaded gas has declined. Containerboard box demand is declining. All these metrics in the US are in recessionary trajectories, except for supply. And if you include Canada, it's in excess of about 6 million barrels a day of liquid fuels. I have to include liquid fuels, my farm background in ethanol. And partly, then you look at that, that's about the same as OPEC's spare capacity. You see the trends there? There's nothing good for that. And just imagine we have a new President Trump who's drill at will. There's nothing good here for crude oil prices. And then there's that issue of every single time crude oil pumps up a little bit in price and the stock market pumps up a little bit, what it needs is Fed easing, and that Fed easing expectations in the market keeps getting taken away. At the beginning of the year was around 170 basis points, and the year ahead, now it's 100. And partly when you see crude oil spike up, that easing in the future goes away. So it's a lose-lose for crude oil prices. And you're seeing that in virtually all of the commodities with the exception of one, and that's gold.
Laurie, we've got obviously the Middle East crisis, and we've generally sensed that as terrible as it is, it hasn't conflagrated into a major threat to energy supplies in the region. What's the outlook for Europe? Still 2+ years now. We just passed through the second anniversary of Russia's invasion of the Ukraine. We seem to be stuck, and typically winter, the war does get stuck because of the cold and so forth. But how big a disruptive factor is that for the outlook for Europe? We hear the Europeans, there's still gas flowing through Ukraine to Europe from Russia. Talk of that now being, when that contract expires this year, that won't be renewed. Where is the war in Europe, in Ukraine, impacting, and the outlook for Europe for more funding for the Ukrainians to sustain the war? Where do you think the priorities of that go?
Look, I think the feeling is, and it's that everything is kind of under control with Europe when it comes to Russia, and all the decisions that had been taken, all the measures that had been taken, the alternatives, all of that made them like kind of feel comfortable vis-a-vis their policies with Russia, regardless what happens. But I think the other problem today is, and I think it's since the IRA, it's with the US. Understanding, is the US our enemy? Is the US our ally? Like when we need mostly, when we are like really...
Is that a question being asked in Brussels now where you're sitting? That's quite a profound question.
It's like, what are these Americans trying to do? And now I think it's more affected by the elections as well, and the election outcome, wondering like if Trump comes back, is it a good thing or a bad thing to us? For NATO, like, all these statements that Trump is doing about NATO, about drilling, other things. But like today with the LNG stuff, when the Biden administration, for environmental reasons, for electoral reasons, whatever, they decided that the new contracts might be looked at again, revised again, etc. And when the setup in Europe is that they are relying mostly on LNG coming from the US, then they wonder, they say, okay, is this reliable or not? Or are we going into another...
Have they moved from one dependency to another?
Yes.
I mean, they got out of Russia to go to America, but it's equally as dependent.
So short term, and I think short term now, yes, this is a different dependency. And then going forward, even when they rely on renewable, on hydrogen, it's a different dependency. I think because like regardless of these lapses of time or historical events like the war in Ukraine, the war here and there, the world is made to be interdependent. Like this whole idea about climate change and about like resources that are getting smaller and smaller, and people getting like more and more on this planet and needing to strive, all of that requires that we all help each other. And there is no one like, I'm alone, I can satisfy my needs, and that's it, I don't need others. So this interdependence is clear that it doesn't need to be with leaders that only think about themselves. My country comes first, I don't care, or belligerent a political class like that wants war to others, etc., etc. That's not the way forward if we want to be a bit philosophical today. But I guess,
but it's certainly
there is no alarm mood in
In
Lebanon,
Brussels.
definitely in Brussels. So they feel that it is under control, working on the next phases, etc. And even like with yesterday's decision of Ursula von der Leyen to continue with the second term, I guess that means that they want to continue with the green energy and looking at the changing world now after the invasion of Ukraine. So that is like, yes, security, but yes, competitiveness as well. How to make the Green Deal like in the favor of the industry in Europe at the same time with security issues. So,
Dr. Charles, I wanted to get your view on the question of the East Med. You finished up your earlier comment, or your connection dropped, about, we've been talking about the development of the East Med for a number of years, and the outlook for was always sort of neutral to negative, that the economics were there for the East Med. But in recent times, we've seen the national energy companies in the Gulf, and now most recently, and you mentioned there'd be headlines coming out of Egypt because of the energy conference this week. We had a big headline from a senior ADNOC executive saying that the future for ADNOC is gas, and they've gone into a big opportunity in Egypt with BP, and we've got obviously Qatar Energy in and around Cyprus. What difference does the arrival of the big national energy companies from the Gulf make to the economic viability of gas development in rather deep, expensive waters of the East Med?
Well, I mean, the developments center around Egypt, as I said before. I mean, in Cyprus, there could be a bit more drilling, but it's more limited opportunities right now. I mean, Cyprus is still waiting to see what happens with the development of Aphrodite and Block 6. But in Egypt, the opportunities are increasing fast. The population is increasing, demand for gas is increasing. The government is, despite the problems it has in gas production, is still pushing for use of gas in transport, for example, increasing use of gas in transport. There is a fixed market there, as I said before. Prices of gas in Egypt are fixed by EGAS and not necessarily related to the global markets. They have fixed them some time ago, and they have.
But isn't that for the domestic market, not for the export market?
But the export market has difficulty. They are not exporting right now. Egypt exports of LNG from Egypt last year were only 3.7 million tons, nothing, very little. And this year is not expected that that export is going to go up in any way. It's going to probably be even less. So export doesn't come into it. It's the domestic market that is attracting this attention and interest, because in effect, prices in comparison to production costs in Egypt are still quite healthy. That's why, for example, Chevron has embarked on a $24 billion project to expand production of Tamar by 60% almost, from 1 BCF per day to 1.6. And most of the gas is destined to go to Egypt, simply because Egypt is keen to get all the gas it can get. New discoveries may come in Egypt.
Laurie, jump in on that, because that doesn't sound too optimistic for Lebanese outlook. Dr. Charles keeps pulling me back to the Egypt East Med. I want to talk about the Lebanese, Syria, Cyprus East Med, because there's big national actors from the Gulf coming in there as well. But Dr. Charles doesn't seem too optimistic about that.
No, I don't. I'm not optimistic about Lebanon. Lebanon has its own problems.
Let's get Laurie on that. Let's get Laurie on that point.
Okay, so just let me
But my ultimate question here is, do the national energy companies make a difference to the economics, which would otherwise maybe seem unattractive?
Look, so definitely this is a new trend that we are seeing about the national oil companies, especially the Gulf companies, coming into investment outside their countries. Like it was always focused on there, but this is part of the diversification of these companies, trying to diversify their portfolio, trying to diversify geographically as well. So, for instance, in the Lebanese case, Qatar Energy being part of the deal that happened in 2022 after the a maritime deal between Lebanon and Israel, it was part of the deal to have Qatar Energy coming in to support financially when needed the exploration with Total and Eni, because Lebanon, as you know, is completely failing, and there is nothing that is attractive in Lebanon to invest, to get investors, or even to get like the money you need to borrow the money for companies to work on. So Qatar Energy, as long as it is there, there is the political clout and there is the political green lighting for the project. That it means that if money is needed, Qatar Energy would be easier to give money to do the support. So this is the kind of understanding we see about like when you have Gulf money coming in. Qatar Energy is specific in that. I'm not sure that if ADNOC or others have that political, if you want, easiness as well. But definitely, what is interesting, now like the Lebanese government is in negotiations with Eni, Total, and Qatar Energy for Block 8 and 10, and the Lebanese government doesn't like the proposal that was submitted by the companies, and it wants more of the financial benefits. It wants the companies to straight away start working, and this is not what the companies want. That first of all, they cannot give them the financial benefits when the risks are so high, and then you see the risk like in the middle of the war.
Well, you wonder if there's even a Lebanese government that could sign a contract. Let's go to the.
But can I say one thing, just because very interesting, and because I've been thinking a lot about Churchill in the past 24 hours and 48 hours.
Churchill as in Winston Churchill?
As in Winston Churchill, yes, and not the Churchill stop that is next to my Brussels apartment. So it's no lasting enemies, no lasting friends, only lasting interest. Like in the middle of what is happening between like in Israel, you see that in Israel and Palestine, you see that Egyptian companies are signing deals to expand the LNG projects with Israel so that they could get the benefits because they need the gas. And so these are the things.
These are lasting interests. Let's go to the survey question. Brent crude oil climbed 10% in the first half of Q1. What will it do in the second half of Q1? Brent crude oil climbed 10% in the first 6 weeks or so of the year. It's up. What will it do in the second half of Q1? Are we in a continuous rise? Will we see a fallback in the second half of Q1? So there's not a big window of time we're looking at here. Or will the oil prices plateau to where they are at the moment? They're at that 83 piece. So will this 10% continue, rise, fall, or plateau? Place your bets, ladies and gentlemen. Mike Malone, I wanted to get your thoughts on, speaking of the price of money, which was mentioned earlier, that we started the year with the idea that the price of money and the Feds were going to cut rates sooner and as early as next month. That's backed away from that now. Market expectation is higher for longer. What difference does that make, A, to demand for energy in the US, higher prices for money, and for investment into CapEx?
Let's look at the facts. The average price of money is always a big factor in all commodities. Typically, commodities bottom, at least the last 20 years, bottom about almost 2 years after the first Federal Reserve ease. So it hasn't even started. And you look at the PPI measures of the four horsemen of the global economy, the US, China, Germany, and Japan. The average is -3%. That's very rare. So it's deflation in terms of PPI. It's typically materials and commodities. Yet the U.S. interest rate, Fed funds at 5.33%, is the highest ever versus that negative deflationary number. That spread around 8%. My data only goes back 30 years. We've never been that wide. So it's very very restrictive. And then you see those trends in U.S. demand decline and U.S. supply increasing. There's nothing good there from a U.S. interest rate standpoint, U.S. supply and demand standpoint. It's got geopolitical risks holding up crude oil. So the way I see it is the bottom line to get crude oil, to get interest rates lower, typically it's probably going to take either crude lower or stock market lower. And I don't see how interest rates can stay down if crude oil goes up. It's an inflationary factor. So right now, everything's tilting the wrong way, and it's just waiting for something, a little bit of a catalyst. And like I said, I'm obviously quite bearish. I remain that way. But for interest rates to really drop, as the market's been expecting, a year from now, they've been wrong for 2 years. It's going to take probably lower stocks, and higher crude oil is not a good thing for interest rates to go down.
And Charles, last word to you on that. From a European perspective, obviously inflation does seem to be tackled, but now we've got recessions, technical nonetheless, Germany, the UK. What is that combination of still high rates, inflation or recession, although not deep ones in Europe, from an economic growth point of view, for energy demand point of view, the outlook for Europe this year?
Well, I mean, Europe at the moment is in election fever. I mean, everything seems to be driven by elections. So I don't expect any major changes in interest rates, even though there are indications that they are considering a cut in interest rates. They're only considering. There is no clear indication that they will bring interest rates down. Especially, as you said, with the problems happening especially in Germany. The German industrial output is 20% down in comparison to pre-COVID levels. It has gone massively down, and still there is no clear indication that it will recover. And election fever is predominating. Ursula von der Leyen is trying to get re-elected. The right,
that's a done deal, isn't it? I mean, it's
a done deal, but it's not absolutely clear. I mean, there is not yet a clear opponent, but she will be the candidate for her own party. Beyond that, we'll need to wait and see. She has given concessions to the farmers, as you probably heard, after the farmers got into the streets on environmental targets. Europe is still trying to push for higher targets. I mean, for example, Europe is trying to push for a 90% cut in emissions by 2040. But the rise of the right-wing parties within Europe is expected to shock the parliament in Europe.
Will this guy Wilders get to form the government in Holland? Is that seems to be dragging on?
Well, but the Dutch way of forming governments it takes always a long time. Everything happens by consensus, so it takes a long time. But yes, the answer is that he will form a government. His popularity rates have gone much higher now than before the elections. So the other parties will dread going back into another election because they know...
So a right-wing government in Holland could certainly be sand in the wheels of a lot of these development and change the direction of travel for 2024 in Europe. We're going to have to leave it there, I'm afraid, and close out with the comment from our correspondent in California who's staying up far too late, Richard Radoglia. Green energy is a fool's errand, which is bankrupting the EU and particularly Germany. There you go, Richard Radoglia. You heard it here first, or you've heard it here a few times from Richard nonetheless, but certainly Germany and Europe are having a challenging time. Is it because of green energy? That's the question. I'm not sure. So what we'll do in the second half of Q1, it looks like plateau is the safe bet. I'm not sure. I'm on the rising vote myself. Thank you, guys. Mike McGlone, rock star, up late in America. Laurie Atayan in Brussels, and Dr. Charles Elinas. Really appreciate your time joining us from Tunisia, I believe, today. Or is that Laurie?
It's me.
Oh, it's you.
Enjoying the sun
today.
Austria, Tunisia. What are we doing, Mike? We gotta get on the road. Okay, guys. All the best. Cheers.
Bye.
Bye.